I'm going to walk you through the process of creating a chart of accounts for this particular hotel in GNUCash and then completing the journalization of all of the transactions that are listed on the problem, which are right here, and looking at generating reports such as the income report and the balance sheet. Alright, so the first thing that we need to do is we need to go ahead and open up GNUCash. Once the program starts, what you'll need to do is click on File, click on New, and this is going to allow you to create a new chart of accounts for this particular hotel. Click Forward. You want to leave the currency as US dollars because that is the currency that we're dealing with. Click Forward. Now you're going to have an option of selecting from different categories of different types of accounts. The one that's automatically selected by default is the common accounts, which we do not want. So what you want to do is you want to uncheck this option. So you can either uncheck it like that, or you can click on Clear All and it'll make sure that nothing else is selected. Then what you want to do is you want to scroll up to the top and you want to select Simple Checkbook. We don't want to select anything else because we want to start with the smallest chart of accounts that is available through the system. So when I select Simple Checkbook, you'll notice that this chart of accounts, which is located on the right, is going to change. Once you've selected it, your chart of accounts is going to change to the following. We're going to need to modify the chart of accounts to look identical to the chart of accounts that we have for the Waikiki Hotel. So go ahead and select Simple Checkbook and click Forward. You can skip this option. We are going to enter the opening balances at a later stage. So click on Forward and click on Apply. You're going to get prompted to save as. What you're going to need to do at this point is you will need to create a folder for your hotel and then create a file name for the hotel files. So first we're going to create a folder on the desktop. So make sure that you select Desktop and then click on Create Folder. Give your hotel a name. I am going to call this hotel the Waikiki. Hit Enter. Now you'll notice that you're going to have a small little button over here that has the name of the folder that I just created. The next step is to create a name for the file that we want to save. And I'm going to call this Waikiki again. So the folder is called Waikiki and the file inside of it is also going to be Waikiki. Go ahead and click Save As. And your folder should now be created and should be located on your desktop. From now on, the system is going to automatically start saving the work that you do into that folder. So the first thing that you want to do once you've created the folder is to build your chart of accounts. So what we're going to do here is we're going to go ahead and click on the small little plus sign next to the assets icon and also the equity to maximize that account name to see what exactly is located underneath it. Now we know from our problem that we're going to need to create several asset accounts like cash, land, building, equipment, accounts receivable, and food inventory. And some of these fall into the current assets category and some of them are considered to be property and equipment. So what I like to do is I like to create placeholders or titles and start listing the accounts or creating the accounts that I need. So let's begin with the current assets. Now we know that in the current assets we don't have a checking account for this problem, but we do have a cash account. So what I did right here was I decided to change the name to cash account and the description. So I will right click, select edit account, and I am going to change the name here to cash. And I'll change the description also to something else. I'll call it assets. And for account type, I'm just going to go ahead and list it as cash. And that's all you need to do for the cash account. I'm going to click on OK. And you'll notice that the name just changed right here. The next thing that I'm going to do is I am going to create the section for the property and equipment. So I'm going to click on New. I'm going to call this Property and Equipment. The description is Asset. Under account type, I will select Asset. And over here, you need to select exactly where you want this new account to appear. Now, I want this to be listed under assets, not under current assets or under cash. So I need to select this as the parent account. Now, since this is strictly a label, I don't want to have any dollar amounts appearing next to it. You want to create this as a placeholder. So you want to check on this box right over here, which means that you cannot post any charges to this label. This is strictly just a header. It is not a specific account per se. So type in the name, the description, check the placeholder box, make sure that asset account type is selected, select the parent account, and then you're going to click on OK. Great, so now we've got a placeholder called property and equipment. The next thing I'm going to do is I will go down this tree list right here and modify the accounts that need to be modified or create new ones. So the next thing that I want to do is I want to create a liability account. And under liability, I would like to have the labels current liability and long-term liability. So let's go ahead and do that. I'm going to create a label called liability. Description is liability. This is a placeholder, and this is going to be considered a liability top level account, which means it's going to be basically listed just like the assets and the equity and the income statement. It's not going to belong to any of these other accounts. It's an account on its own. Alright, so now we have a header called liability. I'm going to create underneath it a current liability placeholder. I'm going to select liability once again, and now I want this to appear under this heading, so I'm going to go ahead and select that. Great. Now you'll notice that there's a plus sign that appears next to the liability title. If I click on it, you'll see the current liability is listed underneath it. Alright, let's go ahead and do another one, and this one is going to be long-term. This is also going to be a header because we're going to have the mortgage payable underneath that. So select placeholder, select liability, and you want the parent to be liability. Great, so now we've got two headings under liability. Let's see if we need to add anything else. Yep, we need to go back and change this account right here. In this particular example, we don't have an income account. However, we do have a revenue set of accounts. So I'm going to edit this, change this to revenue, change the description to revenue, and over here we are going to leave this as an income account. And this is a top level account. However, this is a placeholder. I don't want to be posting anything directly to it. I'm going to create a food revenue, a beverage revenue, and a rooms revenue account. Alright, so let's go ahead and do the sub accounts for revenue. So the first one is room sales. Description is revenue. The account type is income, and I want this listed under revenue. This is not a placeholder, so do not check this for the room sales. This is an actual account where we need to post amounts to it. Okay? So you'll notice once again that revenue now has a box or a plus sign next to it, and room sales is now listed underneath it. We need to do the same thing now for the food sales and the beverage sales. Great, so we've got three accounts under revenue. We've got some other accounts that we need to now start creating. So I'm going to start from the top. Now under assets, we've got the current and the property and equipment. Under current assets, we have cash, but we also have some other accounts such as land. So I'm going to go ahead and create the land account. I apologize. Actually, land will belong under the property and equipment. So let me go ahead and take this one step back. So under current assets, we need to ask ourselves, what are our current assets? And our current assets right now are accounts receivable and food inventory. So I will go ahead and create a accounts receivable account, and then we will call this asset, and I'm going to select asset and select current asset because I want it to be listed under current assets. Great, so we've got two current assets. We have one more to do, which is the food inventory. It's an asset. We're going to select asset, and we want this under current assets. Click OK. And it looks like we've got all of the accounts that we need for current assets. Now we can go ahead and create the accounts that belong to property and equipment. So the first one would be land. Maximize. The next account is going to be building. Make sure that the asset account is selected and also the property and equipment. And the last account that we need to create is the equipment account. Alright, so it looks like our asset accounts are complete. Looks like our revenue accounts are complete. Our expense account is not complete. First of all, we want to make sure that this is a placeholder. So let's go ahead and edit this account and make sure that this is a placeholder. Click OK. Because we want a couple of new accounts to be listed underneath it. So this is just a label. And the accounts that we want to list under expenses are salaries, and the second account that we want to create under that is advertising. Great. So assets are complete, the revenue accounts are complete, the expense accounts are complete. The equity accounts are not complete. You're going to notice that there's an opening balance account. You want to leave that there. Do not touch this. However, you do want to add a couple more accounts. And the accounts that you want to add are common stocks, description is equity, and click on equity because you want it to appear there. Next account that we want under equity is retained earnings, which we really won't use for this example, but let's just go and create it anyway. Great. Now we need to go to the liability account because we are missing a couple of accounts here. And the first account that we want to create is our accounts payable account. And this is a liability, and we are going to place this, you want to maximize this liability title, and you want to list it under the current liability, okay? Right there. So if you look at current liability, now it has this little box with the plus sign, and it's listed underneath it. Now we want to create our last account, which should be the mortgage payable. And we want this listed under the long-term liability. Great. It looks like all of our accounts are not created. We've got our main titles, our subtitles, or labels, and then we've got the accounts listed underneath them. Great. Once we have this completed, the next thing that you want to do is you want to begin entering the balances, the opening balances that we have listed in the problem. So I'm going to switch over to the problem sheet for just a second. And what you'll need to do is, the first thing you want to do is you want to enter all of these balances into your GNUCash ledger. And to do that, what we'll do is we will go back to GNUCash and begin with the very top account. So we know that the cash account has $300,000. So to enter $300,000, just double click on cash, and this is your cash ledger. Select the opening balance date, and that should be November 1st. The description should say something like this: balance. And transfer is the double entry system for GNUCash. So if you enter a balance in this account, the cash account, it needs to also be entered someplace else, because we know in accounting, in double entry accounting, that every transaction affects every transaction affects two or more accounts. So if the cash account is affected, then naturally there's going to be an effect on another account, and in this case it would be an equity account. So we are going to select, so you're going to go to transfer, click on transfer, and you should see a drop down list like this, and you want to select an equity account called opening balances right there. Next thing you want to do is, since you're opening the cash account with a balance, it means that the cash account is receiving some money. So the $300,000 is not a deduction, it is a receipt, which means that you're getting $300,000 from a previous month. So you're going to enter $300,000 and hit enter. Once you hit enter, the balance should appear here on the right. Great. So now that we're done with the cash account, let's go and enter all of the other balances. You can leave this account open if you want to and simply switch to the accounts tab and go back to your chart of accounts. Or what you can do is, if you want to get rid of this, just go ahead and close it and move on to the next account, which is land. So I'm going to double click on land and select November 1st. Type in the word balance. This is a transfer column. I need to be selecting the equity opening balance account. Alright, so $65,000 goes into the increase column. Enter. Great. Close. So you'll notice that the amounts that we're entering are actually appearing here now on the chart of accounts. So it shows that my net assets are $365,000. Okay, so we enter the cash and land. Let's go down to building. Once again, we want to put the correct date. Description is balance. And once again, we're going to go to the equity, open balances, and we're going to increase building by $1,700,000. Too many zeros there. All right, there we go. $1,700,000. The next account that we want to do is our equipment, and that has $15,000. Enter. Close. Next, we're going to go to accounts payable and put in that opening balance. Accounts payable is listed right here. Opening balance. Now, accounts payable, since we're starting the account with a balance, it means that we need to increase our accounts payable right now to make sure that we actually have an amount that we owe people. So over here, you want to make sure that you're putting your amount in the increase column. Okay. So we're going to increase our liability by $115,000 because that is our opening balance. There we go. We're going to close. The next opening balance is our mortgage, and our mortgage payable is $15,000. It's very important that you select the correct date because that is going to affect how your transactions appear on your ledger and how they appear also on your income statements or your balance sheet. Alright, so we're in the mortgage payable. We're going to go ahead and put in balance. Once again, we're going to go to equity opening balance and we're going to increase this to $15,000. And our last opening balance is our equity common stocks. And we're going to increase this to $1,950,000. Great. So now that we've entered all of our opening balances, we can go ahead and close this. And now what we need to do is we need to go to the problem and begin completing these transactions. So that is the next step. So the first step is to build your chart of accounts. The second step is to input your balances, and then the third step is to go ahead and complete the transactions. So let's go ahead and do that right now. We're going to begin with the first transaction, which is pay $3,000 on November 1st in advertising expense. So that is $3,000 that you paid in cash for that account. So I'm going to go to advertising expense, and this was on November 1st, so we'll put in the date, and the description was paid in cash, advertising, and you need to ask yourself, what account does this correspond to? Well, this was advertising that was paid in cash, so this would affect our cash account. Our cash account goes down while advertising goes up. So the expense for advertising goes up by $3,000. Great, you can go ahead and close that. Now the second transaction is you purchased food inventory and paid $1,500 in cash. So food inventory goes up by $1,500 and cash goes down by $1,500. So let's go ahead and go to the food inventory account. And this was on November 3rd. And the description is paid in cash again. And this is going to affect our cash account. So food inventory goes up by $1,500. Go ahead and close that. Let's look at our next transaction. Received $6,000 in cash in room sales and $4,500 in beverage sales. Okay, so we got two cash payments, one for room sales and one for beverage sales. I am going to go back to GNUCash, and instead of posting a charge under room sales and then another one under beverage sales, what I'll do is I'll just go to the cash account and do it here. So I'm going to go to cash, and this transaction was on November 4th. So we'll check November 4th, and then we will say room sales here, cash payment, and so this is our cash account. So we want to indicate that our cash account went up and our room sales account also went up as well. So the corresponding account to the cash account is our room sales. So we need to go to revenue, room sales, and here we actually received cash. So our cash is going to go up by $6,000. Great. And then we're going to do a very similar transaction to this one, except this one is going to be beverage sale, cash payment, and the revenue was for beverage sales. So we're going to go to revenue, beverage sales, and increase our cash by $4,500. Great. Next transaction. Let's go ahead and maximize this. Here we go. Next transaction, we made a cash payment of $60,000 in accounts payable. Okay, so our cash account went down by $60,000, and we paid off a portion of the money that we owed someone. So if we go back to GNUCash, We know from our chart of accounts in accounts payable, if we scroll down to our accounts payable, a liability, we owe someone $115,000. So what we're saying is we just paid $60,000 in cash to reduce this amount. So let's go ahead and post this either in the accounts payable, you can do it, or you can do it in the cash account. I'll just do it under the cash account. So let's go ahead and put in the date, which is November 5th. And we are going to describe it by saying accounts payable cash payment. Okay, and once again, this is our cash account. So in this ledger, we want to say that we spent $60,000, and we spent it on our accounts payable right here. So we didn't receive money, we spent money, we spend it. Okay, so we're going to put $60,000 here. 60, 1, 2, 3. There we go. Our next transaction right here is on the 7th, and this is also a cash payment, which means our cash goes down of $8,000 in mortgage payable, which means we reduced our mortgage by $8,000. So I'm going to go back to GNUCash. I'm going to put in the date, which is November 7th. And we're going to say mortgage payable cash payment. And this corresponds to our mortgage payable account. And we spent $8,000 on mortgage payable. Great. Now let's go back to our problem sheet again. Okay, so here we've got a lengthy transaction. A corporate client staying at the hotel with his group charged the entire group's bill totaling $12,000 to his company's open account. The breakdown of the charges were as follows. $8,000 for rooms. That means our room sales went up by $8,000, and our accounts receivable went up by $8,000 because this client isn't paying us directly, they're just charging it to their account with the hotel. So room sales goes up by $8,000. Food sales goes up by $3,000, and beverage sales goes up by $1,000, and all of this is the total of $12,000 is all going to be basically billed to the accounts receivable account. So let's go ahead and go to the room sales and increase this by $8,000. So I'm going to close the cash account, and I'm going to go to room sales. So this happened on the 11th of November. So we're going to say corporate client. So I'm going to copy this so I don't have to keep on typing it out again. So corporate client room sales, and they charged this to their account, to our accounts receivable, and this was income of $8,000. I'm going to close room sales, and now we're going to go to food sales. Food sales went up by $3,000, and that was charged to the accounts receivable account. Great. Last but not least is our beverage sales, and that account went up on the 11th by $1,000 by the corporate client. Accounts receivable, this is income, goes up by $1,000. Great. Great. Let's go ahead and look at our last transaction. We're almost done. The last transaction was on the 15th. We paid $3,000 in salaries. Let's go back to salaries. This is on the 15th. So So we paid salaries in cash, and once again this is the ledger for the salaries, and over here we want to list the account that the salary was paid out of, and this was a cash account. And the amount that was paid was $3,000, so this was a $3,000 expense. And I'm going to close this, and that should be the last transaction that we have. We don't have any more transactions. So this is how you journalize all of your transactions in GNUCash. Now, we've already done this exercise in class, and you've done this on paper, and if you remember, or if you go back to your first ledger, you'll notice that, or your trial balance, you'll notice that the profits in your trial balance was $16,500, which is what we have at the bottom over here, which means that our numbers are correct. The next thing you can do is you can go ahead and click on reports and see what your income statement looks like. So go to reports, income and expense, and over here scroll down to income statement, and that should show you what your income statement should look like. Simple, brief, and it's got the time period, and you've got several options also to select. You could also select profit and loss, which looks exactly the same. Now you can also go back to reports and look at your balance sheet. To do that, you need to go to assets and liabilities, and you want to scroll down to balance sheet. And if you look at your balance sheet, your total assets are equal to your total liabilities plus equity. So we know that our entries were all accurate. And this is how you complete the assignment on GNUCash.